The trade deficit in the US rose to 2.5%, $40.4 billion in March, signs that the global economy is recovering.
Yes, very much so. I think that US number was the highest trade deficit that they'd had since December 2008. Looking at the imports and the exports, also highest going back to October 2008, so a lot more economic activity going on. I think a big part of the imports was a rise in crude oil, with those prices higher. But certainly underlying demand still there. The other consumption goods outside of petroleum products are also rising quite substantially. So a lot of imports coming in, a lot of exports going out. The deficit widening a bit, but both of those numbers going up. And I think that points to, as you said, growth in the global economy.
Looking at commodities, if we look at the gold price continuing to touch new highs, it reached a level of about 1,245 at some point yesterday as investors run to gold as a safe haven asset. Are you bullish on gold? Are you seeing a bit of a run in gold, or can we see it going even higher?
You know, it's one of those metals and commodities that when it starts running, it has a little run and then everybody forgets about it for a while. But I think while we've got all of this global uncertainty still, pervading and in the markets at the moment, gold could still run a bit more. There's a lot of uncertainties. We see bits of good news from time to time. New austerity measures coming in, new bailout packages, so things look bright and gold slips back for a little bit. But then those fears come back and we start thinking about the longer term impact and how we're going to actually pay for all of this in the longer term. And when the market gets those kind of fears coming back, then the gold price runs a bit. So I think the traders will tell you it's probably got a bit of momentum and can still run a bit.
Austerity measures in Spain, the government looks to cut by 19 billion in 2010 and 2011. Workers there by 5% this year and freeze the wages next year and slash jobs, 13,000 jobs going forward. This is positive for the markets, however, but could we see a similar situation as where people going out on the streets like we saw in Greece?
Well, this is very emotive when people lose their jobs and or if they keep their jobs and they know that they're not going to get an increase for the next couple of years while inflation carries on and they're actually moving backwards. It does get you thinking and out onto the streets and throwing bricks, and so it's not beyond the realms of possibility that we could see some of that action. Maybe it will start a little peaceful and maybe not get to where we are in the Greece situation. But those measures are definitely needed. I think the global economy demands it. The European economy, those peers that are bailing out these economies certainly demand it. So it's unavoidable, as it was in the Greek case. But yes, when there's no bread on the table, I think you do maybe go out and protest a little.
Finally, a new era in politics in Britain, the coalition between the Liberal Democrats and the Conservative Party. First matter at hand would be to decrease the budget deficit going forward.
Yes, very substantial problem there. Also, this Europe-wide virtually problem of large deficits, 11.5% of GDP in the UK. And I think Mervyn King said to David Hale that whoever gets into power now is likely to lose power for a generation because they've got to put in very unpopular measures to reduce that budget deficit over time. So this could be Labour's best strategy or best chance of a longer term recovery and getting back into government in a bigger way. But certainly they've got a lot of work to do. They've got to put in some very painful measures as well to bring that budget deficit down.
Okay. Manufacturing here in South Africa increased to 6.3% year on year, with only 2 sectors out of the 10 declining. Were you surprised at that number?
It was a big number. So I think I was surprised. I think everybody was surprised. The market consensus was more for a 3% kind of number. So yes, that just talks to some good demand from the export side. Talking again to the global economy, the demand out there. And maybe one of those factors that will feed through into the MPC's decision later today, seeing some of that growth, with manufacturing, one of the bigger parts of the economy, actually growing at that kind of pace, should support, the overall growth of the economy.
But we have seen the PMI actually driving up. There's that positive momentum in the PMI translating into these positive manufacturing numbers.
Yes, we've been above that neutral 50 level for some time. I think the last two numbers just dipped slightly, but still above 50, so still indicating expansion in manufacturing. And that's just what the doctor ordered. And I think it's starting to come through in the actual manufacturing numbers now.
Okay. We've got the SARB later out today. They'll probably stick to guns by leaving it unchanged. But unemployment rate sits at about 25.2%. Could this then twist their arm to decrease interest rates just one last time?
I don't think so. I think they're going to look firstly at inflation. They're going to see inflation at 5.1%. They're going to see the outlook is fairly stable, not going to go that much lower, but stay within the band for some time. There are inflationary concerns, but not a big problem. They're going to look at the growth side. They're going to look at the manufacturing numbers coming through. That should ultimately, if we keep seeing that growth, create jobs again over time. We'd like to see it a lot higher, but it's positive. And then some of the other consumer-related numbers, retail sales, the more recent numbers also starting to pick up. New vehicle sales also positive in more recent trends. So I think some of the consumption side slowly starting to come through. I guess they can still twist their arm and talk themselves into one last rate cut, but I think it's quite a remote possibility. And also given what the governor said, her comments of more recent times, that probably this is it for a while.